Great, let's now look at the format for the statement of cash flows. Remember, there's going to be two methods for statements of cash flows, the direct method and the indirect method. This video, I'm going to look at the statements of cash flows for the direct method, as well as the financing and investing activities. So remember always, name of business, then statements of cash flows for the year ended 31st of December 20x1. And we are then going to break the statements of cash flows into three subheadings. First of all, cash flow from operating activities, then cash flow from investing activities, and last, the cash flow from financing activities. We'll then work out a movement, either an inflow or an outflow in cash and cash equivalents, either a positive or negative. We'll then compare that to the cash and cash equivalents at the beginning of the year, which will give us the balance at the end of the year. And that end of the year figure is what it will be in the statement of financial position. Okay, but we're going to worry about the movements for each of these. So you'll see, I'm going to start off with the cash flow from operating activities. Now, the cash flow from operating activities is where the difference between the direct and indirect method comes in. So remember, we are working with the direct method, and it's all got to do with this very first item, cash generated or used from operations. And here we start off with cash receipts from customers. I'll show you how to do a separate working for that. And cash paid to suppliers and employees. Those are two important figures. We then move down and we have a whole bunch of separately disclosable items. Dividends received, interest received, those are both added in. Okay, then we're going to have interest paid, income tax paid if it's a closed corporation, remember, drawings or distributions, depending on whether it's a partnership or a CC. Then if there's any financial assets that are part of the normal trading activities, you'll take proceeds from sale or acquisition of investments, the cash outflow. Now you'll take note, for each of these, I'm using a negative X for cash outflows, like interest paid or income tax paid. But proceeds from sale of financial assets, if they're held for trading, will be a positive. I then am going to sum all of this up, and I'll get a total inflow or outflow of cash generated from operating activities. Now, I'm still going to deal with the cash flow from investing activities and financing activities in a separate video, but next up I want to go on and spend some time on the direct method, focusing on cash receipts from customers and cash paid to suppliers and employees. Learn this format as your first step, and then we'll get going with the calculations. Thank you.